Good morning, everyone. On Tuesday, the 1st of August, as we head into European trading on a fresh month. We are into the month of August, approaching the back end of the year. Where does the time go? But into markets anyway, on, as I said, the first day of another month. We're getting out of the summer months. Summer months for markets, notoriously difficult to trade in some years. We may see things increase in volatility as we head into September, October, and November, and into the back end of the year. But been a pretty active summer, not in line with some recent summers in past years. Normally you can get a bit of chop, a bit of sideways price action, but there's obviously a lot going on with the central banks hiking interest rates and approaching the end of hiking interest rates, with inflation rallying out of control, with a lot of volatility across a lot of different asset classes. So obviously the past number of years have been strange times, but let's see, do we get it backwards this year, or do we continue on with historical price action in these types of months? But into markets this morning, see what's going on. You can see the yen at 3-week low as traders wait the Bank of Japan shift. Just reading on Bloomsbury, there's reports out that the adjustment yield curve control that they introduced last week, not a formal adjustment of it, but a implied adjustment of it, to up the upper band of their range on the 10-year yield up to 1%. That is likely to be the only tweak to yield curve control until year end. Now, with the fact that that's going to be it till year end, that is negative for the Japanese yen. So there's no willingness to increase it further. There's a reluctance to change anything past that, but there is still room to go on Japanese yields. Now, if the yield on that 10-year continues to push higher and global yields start to push lower off the back of interest rates reaching a peak, well, then that is a situation where the Japanese yen could strengthen. But markets were hoping and potentially anticipating for a bit more to be done into year end. That does not seem like it is what we are going to get. RBA stands pat. The RBA have kept interest rates the same a second month in a row due to the fact that the trimmed mean CPI and the unemployment figures did match the bank's estimates. Now, with that matching the bank's estimates, it would have given a bit of mixed signals if they went and hiked interest rates again. So probably the right thing to do once you try and break it down. And the Aussie dollar has sold off the back of that. Couple that with some weak Chinese data out earlier on Monday, is then obviously a reason for some Australian dollar downside. Apart from that, it's really where we're at in terms of the overnights. Not too much in the way of overnight news. Oil holds near 3-month high on signs of tightening supply. Not as tight supply as people thought. Saudi Arabia were due to cut oil by 1 million barrels per day for the month of July, and actually ended up only decreasing supply by 860,000 barrels per day, so slightly less than what they had suggested to markets. We do have another OPEC meeting on Friday where they are expected to extend output cuts, so something on Friday of note when it comes to oil. We've also got the RBA as well. To the RBA, we've got NFP to think about. I'm shouting out random letters at this point, but we do have NFP to think about on Friday, as well as OPEC plus meetings, which obviously can influence the price of oil. A softer dollar does make oil, or is supportive for the price of oil. Softer dollar supportive for the price of oil. Higher dollar negative for the price of oil. I think Saudi Arabia increasing output cuts, and maybe a softer dollar off the back of some weak NFP prints. That's a reason for that oil trend to continue. Apart from that, we can see the Australian dollar is down across the board. That goes in line with the Kiwi dollar. The Canadian dollar is pretty mixed. Oil down slightly, but you can see Canadian dollar pretty mixed. But they've had a pretty good last couple of months. Canadian dollar is higher across the board, really, against every other currency over the last 3-month percentage change. Euro higher, but not really that much higher. I mean, it's not. I think euro dollar's up 0.05%, so nothing too extravagant on the euro this morning. Sterling's pretty mixed, Japanese yen pretty mixed, Swiss franc slightly higher but not really too much, US dollar higher across the board apart from the Swiss franc and apart from the euro, but again they're not up too much. So bit of strength in the euro, Swiss and the US dollar, but really the weakness is coming from the Australian dollar over the course of this morning's session. Some weak Chinese day, then couple that with the RBA continuing to hold. They said they might increase the interest rates again if the data suggests, but inflation falling, labour market moving in line with the bank's forecast. So as long as that continues, you have to imagine they do not hike interest rates again. US equity futures, European equity futures lower across the board, but the highest amount of percentages that they are lower across the board is 0.13%. So not exactly massive moves across the board. Asia Pacific equities, as you can see, somewhat mixed. Commodities lower apart from copper, but commodities generally lower across the board. Yields then lower in the US and globally as well. So maybe lower off the back of a bit of struggle for global growth, off the back of some negative Chinese data. Drags stocks lower, drags the dollar higher, drags Aussie and Kiwi lower as well with it. And your Swiss franc is slightly higher, as the Japanese yen. It's a bit all over the place post BOJ the other day. You can see up through here, obviously the RBA held rates firm at 4.1%, which is spoken about. The Kaixin manufacturing PMI did miss estimates, the first contraction since April. 50.3 consensus, 49.2 was the actual figure. So below 50 plus below consensus, a double week number in terms of Chinese manufacturing, which is a slightly different calculation to this manufacturing PMI, which was slightly above consensus. But that's where these manufacturing PMIs get tricky. Below 50 is considered contractionary, so yeah, okay, it beat consensus slightly, but it's still below 50, so in my opinion still a somewhat negative number. You then come around to a different version of calculating it. 50.3 consensus, below 50, below consensus, a doubly weak number in terms of the Chinese figures this morning. What that does then to markets across the board, you can see equity markets slightly lower. You can see the S&P, the Dow, the Nasdaq, the Russell slightly lower. You can see the DAX, the FTSE slightly lower. It looks like they want to make an attempt at these near-term lows that you can see on these on these charts. In terms of these US indices, there's a bit of room to the downside to these recent lows, so wouldn't be completely unsurprising if we did roll over and manage to go down and touch off those lows. But certainly negative Chinese data is negative for stocks. Does that result in any material downside? Obviously it remains to be seen. We can see some solid downside in the Aussie to start the day. Kiwi as well, some downside. Euro dollar downside into the close yesterday and continues slightly overnight, albeit you have had a slight pop higher 6 o'clock this morning, but relatively nothing price action. You can see cable relatively nothing. Dollar Swiss sideways, dollar yen grinding higher, but not really too much to go off. Dollar CAD lower aggressively than higher back aggressively. Dollar index not doing too much. So FX land not doing too much across the board, likely due to the fact that these yields are not doing much across the board. Japanese yields remain sideways up at the highest. US 10-year yield on the US 10-year grinding lower, but not really at any sort of aggressive pace. But if that does push lower and break through these lows, negative for the dollar, positive for stocks. So something we do need to keep an eye on. You can see the way this is moving, gradually moving lower, and this is gradually moving higher. So this is always a chart to look at for some direction across the indices market. So do keep an eye on that. But the more this 10-year yield decreases and the more this 10-year yield in Japan holds flat, you should see the Japanese yen strengthen. So we'll keep an eye on that as we head into today's trading session. A bit of a pullback in oil. Nothing too major to be expected when you have an uptrend. Still rather be long oil than short, especially if the US dollar decides to have a bit of a turn lower. That should prove supportive for oil, especially with decreased levels of supply across the global economy. Apart from that, economic calendar for today, you've got manufacturing PMI out of the US and some job openings out of the US. Keep an eye on at 3 o'clock. Obviously, a decrease in job openings is positive, an increase in job openings is negative. Manufacturing PMI expected to be below 50. How far below 50 do we get? Obviously, remains to be seen. But positive data last week, increasing chances of a soft landing in the US. Again, more positive figures means the Fed will continue to look at interest rate hikes into their September meeting. So one thing with the data, you wanted the trend. You don't want some positive, some negative. If you can get it all to trend, that is important moving forward. So job openings, manufacturing PMI will be important later on this afternoon. In terms of where to look for assets, I mean, equities did pop higher yesterday when we were looking at it, so that is somewhat unsurprising. They do look somewhat reluctant to continue their move higher, though. I'm not a fan of shorting indices, but they do look like they want to roll over in today's session. Oil, I think you still have to buy it. That trend will reverse at some point. That won't come forever, but personally I'd rather lose the trade on the reversal than keep trying to pick the reversal. So I will leave that up to your judgment. But that is it from me then. I'm going to wrap it up there. There's a couple of things worth noting. As I said, US equities, do they roll over? This 10-year yield, does that push lower and the Japanese holds firm? That should cause some strength in the Japanese yen. We'll keep an eye on it as we head through into the European Open in about 15 minutes time. We'll have another video out before the US session later on.